Welcome to Married to the Boss.
Hi, thank you for joining us again. Today we're going to be talking about attracting investors. And of course, that's something that as an entrepreneur, money or finances is always top of mind. The money that's going out of the company as well as the money that's coming into the company. So finances are always top of mind for entrepreneurs. And I know that you have touched on a couple of times the importance of, if you are going to bring in an outside investor into your business, the importance of doing that with your eyes wide open. So today we're going to be talking about how, if that is something that you're interested in doing, how to find one that's a good fit for you, and also the things that we're going to be talking about is what they might be looking for when they're evaluating a startup like yours to invest in. And we're also going to touch on some of the pros and cons of having an investor. And also the other thing that's probably as important as actually making sure that you get the right match investor is how to pitch your startup to an investor. That's usually where a lot of us, and I say us because we've made those mistakes as well, that's where a lot of us fall short of presenting our startup properly, so that the pitch is really important. And the last thing that we're going to touch on is maybe some sample questions of what they might be asking you about your startup, because you want to be prepared.
Right.
So like they say in real estate, location. With investors is preparation.
Yep.
Yes. So you're the one that's really better versed in this area than I am. So did you want to get us started, or did you want me to just throw something out there?
I will get us started.
Okay.
This is a tough subject, so we're not experts. So don't think that we're going to come across as experts talking about raising capital with investors, but we know enough about it that our experience in the past 15 years has really helped us to sit down and talk with people with a lot of money that might want to invest in your company. So I'm going to start out by saying, first of all, here we are in the fall of 2020, and I think it should be raised that the COVID-19 pandemic has changed things tremendously. What it was like prior to the virus is one thing, and what it's like today is another. So, but the one thing that hasn't changed when we were starting to talk with investors was that you're nervous, you're looking for money. Some people might be even panicking because they're looking for money to keep their business going. But I think it's really important to say that when Midas says go in with your eyes wide open, this is the real difference. If you go into an investor and sit down and you're all prepared and you make your pitch, they're interviewing you, and they interviewed us. And you're sitting there and you're a little bit fidgety and you're wondering if they like you, you're wondering if they like the idea. And it's very important to know, if you take anything from this segment, is you are interviewing them. They're not just interviewing you. That's very, very important, because this is about a relationship, two-way, not a one-way.
Yes.
Right? So it's your business. You're passionate about it. They're not passionate about it. They're just trying to figure out, do they want to, provide funds to your company, to your good idea.
Oh, absolutely. Because if I may interject and
Yes,
touch
you
on
may.
that, their number one goal or objective in investing in any startup is to make money. They're in it for the money,
right.
And to be honest, they're not in it for anything else. If they end up liking you, that's great. But at the end of the day, all they care about is multiplying the money, the investment.
That's right.
So it's
right.
critical that if you have to deal with that person, to your point, if you have to deal with an investor, of which we're going to get into some, I don't want to dive in and jump ahead of you, but you have to like that person in return.
Yep.
So you can deal with because they will deal with them. Because you will have to cope with phone calls, them stopping by, they're asking questions, and you have to be comfortable with that. So you do have to like them.
Yep. There is a big difference between funding it yourself and bringing in an investor.
Right.
So, and so let's kind of talk about what investors, let's get past the part that you're interviewing them and they're interviewing you, and you hope to leave that meeting with something positive. The one thing that they're looking for, which is the most important, is that you are real founders. When I say real founders, that you are good people, that you your expertise is really, really strong in the field and the company that you're running. They're looking for that engagement. That's the first thing they're looking for. If you go in and just sit down and say, yeah, they say, do you want some coffee or milk? And you say, yeah, or water or whatever it may be. Coffee, milk with your coffee, whichever. I don't drink coffee, as you can now tell. And you just jump right into, this is what we're doing, here's the numbers and all that. That's just the wrong way to go. You have to look at this as, it's really like it's like a date. You're not going to do that when you go out on a date. You're going to kind of, get into each other's head a little bit. You have to do the same thing with investors. And you know what? They're going to make it sound like they're busy. Well, they're no busier than you are. Actually, as startup, you're busier than that investor. So don't let them tell you otherwise, because you're going to know that's sitting there. So, you got to be confident when you're going in. But one of the biggest things that they're looking for beyond your experience, and that you're real people, you're good people, and you've done certain things and accomplishments, is they want to know if you've got skin in the game in that business. If you're going to that investor and you haven't put but a couple $100 into it, I don't know if you're going to get anywhere with that, but they want skin in the game. They want to know. And how much is skin in the game? I don't know what that number is. It depends on your business, whether it's $5,000 or $25,000 or $100,000. We've been there with that skin in the game, and it's nice to go in there, because that question's going to get asked. Okay, so what have you guys put into it? Yeah. And we've put in a lot of sweat. That word sweat doesn't really go too far. Actually, it goes nowhere with an investor. So you can say that you've been working in your business for a year, 2 years, or 5 years, and you put in a little bit of cash, but you put in a lot of sweat. And boy, we put in $1 million worth of sweat. They don't care. Right. So you need to understand that if you go into a meeting and you start thinking, well, we got all this sweat equity, it means nothing to them. Correct. So sweat, blood, and tears have absolutely zero value when it comes to investors. Nope. And the first one that we went into, it was blood, sweat, and tears, and a lot of tears, and trying to figure out how we're going to keep the company going. And you need to be prepared for that type of a question, and you need to have some funds. And the funds could be your funds, it could be family and friends funds, but they really want to know that the founders have got some money in the game. And if we can park on that topic just for one quick moment, the reason behind their desire to see that you are putting some skin in the game, aka money, into it is because they want to make sure that they would be aligning themselves with a group or a person or a startup that believes in what they're doing, right? Yep. Because if you believe in what you're doing, you're going to find a way to make ends meet. And I think you just said something that just really, if you looked at numbers real quick, let's just say that you're talking to an investor and you're asking for $100,000. They're going to expect you to have at least 10% in your company. That's the skin. You got to have at least 10%. If you're going to be asking for 100, you got to have 10,000 into the company. I mean, I think other investors may think 20%. I don't know, but they're going to want at least 10%. because they want to know that, they could potentially lose money. They want to know if you're going to lose money. If they think you're not going to lose money because you don't have anything in the company, then that's a different thing. So just a couple other points, other than having skin in the game. So we talked about, they want you as a founder, they like you and everything's good. You've got skin in the game, so those two things are good. Well, what's next? Well, they want to know if you've got any traction in your company. Do you have a customer? Do you have 2 customers? Do you have 10 customers? Do you have some traction? That's important to them because they want to know if your concept, if your business is working. They definitely want to know the market size. So today, one of our companies, the market size is over $1 billion. That's a big market size. Not everybody has that big of a market size, but if you'd say that, well, we're in a $2 billion industry, well, that's great for some angel investors, but there's others that that are looking for bigger numbers. So market size, that tells them what the growth potential is in your business. That's important.
And that also, if I may, I guess, interject for a second, that also gives them an idea, or at least that's part of the numbers that you have to prepare for them, and that gives them an idea of the payback time, how long it might take for them to make back their money, because, again, I reiterate, all they care about is making money.
And they want to get it back
as quickly as
sooner
practical
than later. So just 2 more points. Competitive advantage. We mentioned this in another podcast, but you've got to be different. So, and you have to have a competitive advantage against your competitors because you're all fighting for the same customers. And then the last thing, at least the point that I want to bring up, is they're going to ask this question. Be ready for it. What's your exit strategy? You may not have even thought about what the exit strategy is, but you need to think about the exit strategy. Are you going to own this business for the next 10 years, 20 years? Are you going to flip it within 5 years? What are you going to do with the company when it blossoms?
And they want to know that, right? Because, again, to go back to the last
to their
point,
pocket.
Yeah, they want to know how long it's going to take for them to get their money back. And based on that exit strategy, they may or may not want to invest money, right?
If you say that you want to be out in 2 years, that investor knows that it's going to be difficult for you to build this business in 2 years. So you got to go in with realistic projections.
It also goes in the other side of that coin, and that is perhaps if you want to keep it for the rest of your life, they probably don't want to partner with you for the rest of their life.
Yeah, they may not want to be a family member.
Yeah. So that's why that answer affects their desire or whether they will invest in your startup or not. Yeah. So, okay, so we've covered what the investors are looking for in a startup. What about the pros and cons of working with an investor? For example, I say that because we have our eyes wide open. We choose to work either with or without an investor because we have reasons behind that. For example, right now at this time, we're choosing not to work with an investor. We're funding everything out of our own pocket, and that's just the way we like it for now. Now, things may change in the future, but right now that's the way we like it. But in the past, we have worked with investors, and we've lived it more than once. And so based on our personal experience, we have pros and cons of working with an investors, the benefits and the disadvantages. So,
I love them.
Well, because we're limited on time, what would be at least the top pro, or however, if you want to start with the top disadvantage of working with an investor, what would that be? Well,
I mean, first of all, the investor knows that they're going to take a risk with your company.
Yes.
Right?
Yes.
That's the pro, is that they're willing to listen to you to give you money. So that excites you to even that you got a meeting with an investor.
Yeah.
And there's different types of investors, without, again, spending a whole lot of time, but, forget the family and friends investors and just look at a angel investor and a venture capitalist, right? They both have different wants and needs.
And different criteria for investing in a company, right? Because,
Absolutely.
For example, we don't meet the criteria or the qualification today, our business today, for a VC.
Right.
Or even some angel investors,
Right.
right?
Yeah.
So-
VCs have real tough requirements. I don't know what else to call them, but that's what they are. I mean,
Yeah,
they
you have- yeah.
they want you
to be netting a certain amount of millions, right?
Yeah, they want you to be doing X amount of revenue and making a little bit of profit before most of them will consider you. Will there be some that take a chance and roll the dice? Yes, but they're far and few between.
Yeah.
So the pro is that they're willing to give you money. The con is that especially if you talk like an angel investor, their standards are going to be that bar is going to be higher, and I just have to use this example because I think it's a great example. But an investor that we met with many years ago. Really good meeting, really nice guy. We hit it off. Everything was great. We thought this is going to be a home run. It was a local investor, so you stay close to them. They stay close to you. Everything with the meeting went great. So just fast forwarding to the end when he says, "Okay, I'm willing to do this and give you what you were looking for." We weren't looking for that much. We were looking for $250,000. And he was pretty much in agreement to do that. And then all of a sudden, he said, "Okay, well, if we do that, this is how we're going to do it." And the first thing that came out of this person's mouth was that, "I'm going to bring in my accountant. The company is going to pay them $6,000 a month, and they're going to take care of all your books." That just did not set well. I think we both looked at each other like a deer in headlights going, "Huh?"
Well, not only that, I think what got to us the most was the fact that he said that we couldn't do the manage the spend, the P&L. We couldn't
Right.
manage the P&L. They were taking over the management of the P&L, and that was a problem for us.
Now that means basically managing the P&L means that if we wanted to buy coffee mugs, we might not have been able to buy coffee mugs or shirts. Just keep that as an example. So understand that when I say raise the bar, that's an example of raising the bar possibly too high for you to want to work with that investor.
Yeah, which that also may touch on the one aspect of dealing with an investor, and that is that you have to answer to somebody else too. So that's another, I don't know, you might consider that a con, a disadvantage. Maybe you like working solo because you can do what you feel is best for your business without consulting somebody else. But with an investor, you do have to get their buy-in and get them to agree to whatever it is that you're trying to do to spend money, right?
Absolutely. So and I want to mention this too. So going back to an angel versus a VC likes to see some type of return of their money between 3 to 5 years. With an angel investor, it definitely goes longer. I mean, yeah, would they like it in 3 to 5 years? Sure, but they're willing to go 5 to 7 years and some up to 10 years. So those are the difference between a venture capitalist and an angel. And so, when you go back to that raising the bar higher, there could be other things, other strings attached to wanting to do business with an investor. We never really got that far to find out what some of those strings would be because we were kind of turned off early on. And the reason why we were turned off is that we have a lot of experience in the field that we're in, which happens to be the travel industry. So that industry is very large, and we have combined over 60 years of experience. So when you're sitting down again with that investor, and that investor says, "Well, we want to bring in somebody that's going to help you manage your company a little bit," that could be a string that they attached to wanting to lend you money. That's a con. Again, they want to give you money, and they're willing to give you money, and they're willing to stroke you the check, but it's not always, good news.
Okay, so then why don't we make our way towards so they're convinced that our audience is convinced that they have to work with an investor. The pitch. This is where either they fall flat on their face or they actually get past the big, huge hurdle of getting them to listen to them. So they've got an investor's attention. I know that this is like everybody refers to it as an elevator pitch because technically that's how much time you have. So what is the best what is the best way of pitching the business?
I think the only way to pitch a business is you first of all, let's kind of go through this. You got the meeting set up, so that means you've probably already shared your 60-second pitch that they're interested, right?
Oh, I was just saying, trying to get their attention.
Right. So you got their attention though by really getting the.
Oh no, I wasn't even.
You didn't go that far.
No, I just said okay. So even though understanding the pros and cons of working with an investor,
right,
they still want to find an investor. How do they get an investor's attention? And I mentioned that it's based on the pitch, right, or the worm that you put on the hook.
You were going right. I was going left. Okay. How do we do that?
Yeah. Well, it's not so much how. I mean, everybody knows how. They have to pitch the person on the idea,
right, but
the
how
product,
to
the service.
How to find the investor?
Well, no, not necessarily how to find them. Well, we can talk about how to find them. We're limited on time,
right,
so
right.
I just thought once let's hypothetically speak on the point of okay, they are in front of someone that could potentially be an investor that they would like to talk to about their business or their service.
Okay.
So pitching that person.
Okay, so I'm going to give you a recent example, if that's okay. So I happened to, or we attended, I think we both attended a conference in Florida, and this particular person was speaking, and they were speaking words that were really perfect for what we do at our company.
Okay.
So it was an opportunity to go up to this person after him speaking to the group, introducing myself, and at that point, because there's 5 other people waiting in line with me, I had 30 seconds. And that's all I had. And in that 30 seconds, I really had to take advantage of every word that came out of my mouth. So I started out by saying, I understand that you did things in the travel industry, and we have this, and I'd sure like to get the chance to share that with you. You talked about how important breakfasts are. Would you be available to do a breakfast, in the next few weeks? That was a 30-second pitch of not so much telling them everything or anything that we did for a company, but I was trying to find common grounds that you're in the travel industry, we're in the travel industry, and I'd sure like to get a chance to pitch what we've got going on.
So then this was, so then you found you found a way to convey that there's common ground there.
And let me say one more thing, sorry. Because this person that was pitching was really sharing his thoughts with the group as an investor of, don't just walk up to an investor and say, this is what we've got and I'd really like to get your money. You got to be able to go up to them and try to find some type of little connection, and that's really, I was really taking advantage of his message to the group.
So the moral of your point is that the money aspect is the elephant in the room. I don't think it needs to be stated that you need money for your a startup. So the point is that keep it simple, keep it short. In the event that that scenario is not going to apply to everyone, but if I'm at, let's say, some other networking event, and I happen to be introduced to someone that could potentially be an angel investor, I need to be ready, armed in my mind with my elevator pitch at any given time, because I don't know when I'm going to run into someone that either A, could be a potential investor, B, knows somebody that could be a potential investor, or C, be somebody that could be an investor / partner alliance type of thing that also you have to pitch them as well, right? So being ready and armed with that information, with your message, I guess, up front is important. And the message needs to be short, it needs to be simple, and I would also add that they need to have numbers, they need to be able to condense everything that we talked about, the market, the numbers, the potential, within, 60 seconds or less, or 60 seconds too much?
Yeah, 60 seconds, again, is really all that you have, and you can, you really don't get into the numbers so much other than trying to build a little bit of a relationship to what I did and had some success with, not all the time, but is the follow-up. I'd really like to talk to you about this more. Can I send you an email with some information? Of course, they're going to say yes every time to that. Will they all reply to that email? No. Will a few of them reply? Yes, but it's no difference than selling your product. You're going to sell X amount, whatever that percentage is, and let's just say it's 1 out of 30. It's going to be the same thing with talking to investors. If you've got 30 investors in a room, if you get everybody, it gives you 60 seconds, you might find one that's interested in what you pitched.
And that also goes in line with the amount of, when you go looking for an investor, that's critical too, because if you go looking for an investor at a time where your business can't stay afloat because it can't sustain itself, that's a problem, because this fishing expedition, if you will, of an investor, or the matchmaking process, the honeymoon, whatever you want to call it, when you go through and after you find your match, that takes a long time before you get that funding, right? So
absolutely does. And when you're talking with them, try not to have sweat all over your forehead. Don't show anything.
Desperation, right? Can't be
Right.
desperate.
Don't do that. Again, it's like going on a date. If you're sitting across the table from whoever you went on a date with, you want to be sitting there dripping. So it's the same thing with talking to, remember this when you're talking to anybody. Your skin's no different than their skin. You know, I've said that for many, many years. So you're human, they're human. Talk to them, you know, like two humans talking to each other, and see if there is the possibility of going to the next step.
Okay, and some of the, just to wrap this up, because we are at the end here, what are some of the common questions that they might ask? Just maybe the top 3 questions. No answers, just the top 3 questions that they might ask.
Well, the first question they're going to ask after you say, hey, I'm so-and-so and nice to meet you, is, so what do you do? What's your company do? Do you have a product? Yep. What does it do? Right there, that's your first question. They want to know what you're about. And when you're giving that answer, they're studying you and your personality and your deliver.
Okay.
That's what's happening in the first 30 seconds of a 60-second time that you might have with that individual.
Okay.
Okay? So that's the first question. Really, they don't ask a whole lot of questions because they really want to hear about you. So when they start out with that first question, they want you to talk, and they want you to see what you've got in that first 60 seconds. If
Because they're investing in you, in the person.
They're investing in you as a person.
Team,
If you take 5 minutes to tell them what your product is about, see you later. They're just, honestly, they're not going to be interested. So you can't stress enough that if you're around an investor, that 60 seconds is absolutely, it's going to be the most important 60 seconds of your business life.
Okay, so then the question would would be, how well are the founders familiar with the product, the service? Is it something that they're, the passion behind the business? Okay.
Well, that's a very good question, just as a point to that, because you might get lucky, and it is luck. You might get lucky that you're talking with somebody for 60 seconds and they're saying to you, well, that is really interesting. I'd really like to hear more. If that's the case, the question should be, would you like to hear more now? Do you have a few more minutes?
Yeah.
And I did that, and it works. Or would you like, do you want me to follow up with you? If they say yes, I do. Matter of fact, I've got 5 more minutes before I'm really interested. Be prepared.
Okay.
That next 5 minutes is important.
Okay. Yeah, but you still need to be ready with to answer certain questions.
Always.
For example, the valuation, like how much do you think is, not only what are you looking for, how much your company's worth,
What the market size is.
What the market size
they're going to want to know
the why behind what you're doing, right? Like why are you solving this? What's the problem that you?
And I think I know we're over our time, but this is important what you just said. You're going to, before you even talk with an investor, you're going to put a slide deck together. And in that slide deck, if you want to call it a PowerPoint, but a slide deck, it's going to be no more than 10 slides. So if that time comes where you're with that investor, what Mayra is referring to as being prepared, you got to have that slide deck right there in your mind. So you got to be prepared to go through in your mind, short and sweet, just like a slide deck, share that information that they're asking for. And in that 10 slides, it's everything that you and that investor are going to need to talk about. Doesn't need to go beyond that.
Yeah, but they would probably want that entrepreneur to have that information top of mind.
Absolutely, that's
Yeah.
what I'm saying.
If
That's got to be scorned into your mind.
If you have to say, oh, just one moment, please. Oh, the answer to that question is XYZ, that's going to turn them off, right?
It is going to turn them off. If you don't know your company up here and you got to look at a piece of paper, sayonara.
Yeah. So final thoughts. I mean, because we like you said, we're way over our time here. So
Yeah.
final thoughts as to dealing with an angel investor.
You got to do it. I mean, when I say you have to do it, you got to experience it and just be prepared when you decide to make that decision to go talk with an investor. Be prepared.
Yeah. I would add, my final thoughts is if you cannot get an investor, it's not the end of the world. Don't give up on your business unless you have to. Maybe if you started the journey of looking for an investor at a time where it was a little too late for your business, then that's a different story. But if you are able to take care of your own and stay afloat and you don't find an investor, it's not the end of the world. It doesn't mean that your business idea isn't worth it. You just have to believe in it enough to stick it out, because at the end of the day, dealing with an angel investor, or at least getting one, that's not, it's very, there is no cookie cutter recipe or criteria, right? There is no
Secret sauce.
yeah, there is no secret sauce. It's very, very subjective. So you have to realize that when you talk to one investor, the conversation might go differently than another one, and it's just very frustrating, very time consuming.
You're going to hear no, you're going to get declined, and you're going to be frustrated, and all that's going to happen. That's life.
Yeah,
You get knocked down, you get back up.
yeah.
It's really that simple.
So that's final thought.
That's my final thought.
Okay, mine too. So I guess we better let everybody get back to work.
Okay. Have a good one.
Bye.
That's this week's episode of Married to the Boss podcast.